But first of all, good morning, everyone. I hope you are safe and healthy and full of access to Clorox. We are here today and really, really pleased to be able to offer this with our partner at the U.S. Chamber, Chris Eyler. We'll be passing off to him in a moment. A few things. In terms of our networking, if you do the participant view, you will see everybody who's here. And joining us is another board member, Dan Eisenman. If you have questions, please feel free to put them in the group chat. We did get a few on registration, and we passed them, some of that to Chris already. We will do the presentation, then we'll get back, and I will ask that you mute yourself as we begin the presentation, just because there's a lot of reverb. And did I start by saying thank you for being a member of the Chamber of Commerce? Especially in these really unprecedented times. Nothing is going to be stronger than a network of businesses that are working together and collectively sharing information and opportunity. That said, we do have on the Chamber of Commerce Facebook page, we've added a group called Open for Business. We invite you to join that group and put any kind of updates on hours or anything you might be doing for your business there. That is open to the community. And it's just one way more that we're trying to reach people. Okay, without further ado, Lorraine and I are having some fun. I said we're gonna all network by looking at our names underneath, but you can see that technology is my friend, and I have managed somehow to log into Lorraine's account, so she was forced to be me for the day, which she is not happy about at all. Oh, Sarah, another board member is joining us. Okay, without further ado, his bio is up on our website, so you can read in full, but Chris Eyler is our Northwest representative here for the U.S. Chamber of Commerce. He knows what he's talking about, he believes what he's talking about, and he is committed to helping businesses however he can. So without further ado, ladies and gentlemen, I'm gonna call you my friend, Chris Eyler.
Thank you, Becca. Just give me a second while I share my screen.
Oh, we're getting that up?
Yeah.
Cool.
All right. Well, thank you everyone for tuning in this morning again, and thank you to Becca and Lorraine for giving me some time to speak with you all. Again, my name is Chris Eyler. I am the U.S. Chamber's Executive Director for the Northwest region, and this morning I am going to give you a fairly broad overview of the Paycheck Protection Program loan forgiveness process. Just as a quick reminder, the Paycheck Protection Program was created by the CARES Act, which was passed about 2.5–3 months ago. The CARES Act created a number of programs, and it also expanded a number of other existing programs to help businesses through the pandemic crisis. The most significant of these programs that is aimed at assisting small businesses is the Paycheck Protection Program. The key feature of the Paycheck Protection Program loan is that the loan proceeds, if they are spent on a number of designated expenses, mainly payroll and some other eligible non-payroll expenses, the loan converts to a grant that does not have to be repaid. Today, what we're going to talk about is the forgiveness process. And the key thing to remember about forgiveness, even though this is a government program, you go to the bank that you got the loan from to apply for loan forgiveness. So just quickly, as of last Friday, over 4.6 million PPP loans had been issued, totaling just over $514 billion. The average loan was coming in at $110,000. Here in Washington State, just over 96,000 loans to businesses had been issued, totaling $12 billion. The reason I bring this slide up is because the federal government appropriated $649 billion for the PPP program. As of today, $514 billion of that has been loaned out. That means there's still $130 billion in PPP funding available. So if you know of a business that still could be assisted by a Paycheck Protection Program loan, they should there is still funding available, and they should talk to a lender as soon as possible. While there's over $100 billion remaining, the authority to issue new loans expires on June 30th. So businesses still have just a little over, or just under a week actually, to still get a Paycheck Protection Program loan. That being said, as I said, we're going to focus today on the loan forgiveness process. This presentation is based on the loan forgiveness application that's been posted on the Department of Treasury's website. In addition to this slide deck that I'm going to be using, the U.S. Chamber has a 4-page guide to PPP loan forgiveness. I will give you the link to that guide at the end of the presentation so that you can go and download that guide. But today what we're going to talk about, how much of the PPP loan will be forgiven, what are the repayment terms of any loan amounts that are not forgiven, and what are the record-keeping requirements? What types of documents do you need to make sure you have available and on hand to back up all of the things that you're putting in your PPP loan forgiveness application? So the loan forgiveness process we see as a 3-part or a 3-step process. Step 1, you need to determine the maximum amount of possible loan forgiveness based on your expenditures over the 24-week covered period. Second, you need to determine the amount, if any, by which that maximum amount of loan forgiveness could be reduced because you reduced salary and wages during the 24-week covered period, or you reduced the number of FTEs during that 24-week period. And then finally, you have to apply what's known as the 60% rule. And the 60% rule, which we'll get into in more detail in a few minutes, specifies that of the amount of the loan that is eligible for forgiveness, 60% of that amount must be spent on, 60% or more must be spent on payroll expenses. So step 1 is, as I said, to determine the maximum amount of possible loan forgiveness. And the first step of this is to calculate all of your payroll expenses and all of your specified non-payroll expenses over the 24-week covered period. So what you want to think about are what are the expenses you use to calculate the amount of loan that you are applying for at the beginning of this process. So look at all of your eligible payroll expenses and then all of your eligible specified non-payroll expenses. These things are mortgage interest payments, lease payments, and utility payments. Next, you need to determine your 24-week covered period. This has been one of the more confusing aspects of the Paycheck Protection Program. The Department of Treasury and the SBA have sought to clarify it a little. And basically, there are two steps you can take here. The 24-week period either starts on the day that the loan was dispersed to you and goes 24 weeks from that day that you first got the money from the bank, or if you are a business that pays your employees on a biweekly or more frequent, in other words, weekly basis, the 24-week period can start on the first day of the first pay period after you get money dispersed from your Paycheck Protection Program loan. One other caveat to this that I want to make sure that you all understand. The Department of Treasury and the SBA have been making a lot of changes to the Paycheck Protection Program since it was put into law. One of the changes that has been made is that under the original law, you only had an 8-week covered period. Congress came in and specified that Treasury needs to make this a 24-week covered period. They made that change on June 5th of this year. So if you have a loan that you obtained prior to June 5th, you have the choice to either select an 8-week covered period or a 24-week covered period. If you got a loan on or after June 5th, you can only choose a 24-week covered period. Furthermore, to make this even more confusing, this week the Department of Treasury issued new guidance saying that it's up to a 24-week covered period. In other words, if you spend the money in 13 weeks, you can apply for loan forgiveness after 13 weeks when you've exhausted your PPP loan. The next thing you're going to need to do after you have totaled up the maximum loan forgiveness is to determine if that amount is going to be reduced because you have reduced salary and wages by more than 25%. So if you have reduced wages by more than 25%, a portion of your loan forgiveness will be reduced proportionately. So for employees who earned $100,000 or less in 2019, or who were not employed by the borrower in 2019, your loan forgiveness will be reduced for each employee whose average pay during the 24-week covered period is less than 75% of their average pay from the full quarter prior to the 24-week period. For most borrowers, that quarter before the 24-week covered period is going to be January 1st to March 31st, 2020. So if their average, if the employee's average pay is less than 75% of their pay between January 1st and March 31st, then your loan forgiveness will be reduced proportionally to that reduction in salary. Similarly, if you have reduced the number of FTEs during the 24-week covered period, you could also see a reduction in loan forgiveness. In this case, your loan forgiveness is going to be reduced if the average number of weekly FTEs during your 24-week period is less than the average number of FTEs during one of 3 reference periods. And you get to choose which reference period your average FTE during the covered 24-week period is compared to. Those 3 reference periods that you get to choose from are either February 15th to June 30th, 2019, January 1st to February 29th, 2020, or if you are a seasonal employer, you can select a 12-week period between May 1st and September 15th, 2019 as your reference period. Again, what you're going to do is compare your average FTE count during the 24-week covered period that you have the loan, and you're going to compare that to one of these 3 reference periods. If your average FTE count equals or is greater than the FTE count during one of these 3 reference periods, you're fine. But if it's less, there's going to be a reduction in loan forgiveness. Now, there are a couple of exceptions that are very important that you need to be aware of. Congress and the Department of Treasury recognize that a lot of businesses have been struggling to get employees to come back for a variety of reasons. So if a business, a borrower, made a good faith written offer to rehire an employee during the 24-week covered period, and that employee rejected that offer to come back, a reduction due to that employee's unwillingness to come back isn't going to be counted against you when it comes to forgiveness. Likewise, if the reduction in FTE count is because an employee was fired for cause, the employee voluntarily resigned, or the employee voluntarily requested a reduction in hours, again, that won't be counted against you as far as loan forgiveness is concerned. In addition to those exceptions, there is also a safe harbor for both reductions in salary as well as reductions in FTEs. If after you do all of your calculations and it becomes clear that you are going to see a reduction in loan forgiveness because you've reduced wages by more than 25%, if you restore wages by December 31st, 2020, in other words, if the wages on December 31st, 2020 are equal to or greater than the annual salary or hourly wage on February 15th, 2020, then you will not see any reduction in loan forgiveness. as far as FTEs are concerned, there will be no reduction in the forgivable loan amount if for borrowers who reduce their FTEs during the period beginning February 15th and ending April 26, 2020, but who restore their FTE count by December 31st, 2020 to what it was on February 15th. In other words, if you reduce your employee FTE count between February 15th and April 26, 2020, but you restore that FTE count to what it was on February 15th by December 31st, you won't see any reduction in loan forgiveness. This carve out is because this is the period of time when businesses had to make a lot of snap decisions to survive, and the CARES Act had not come into being yet. So they recognized that a lot of businesses were making decisions before this program was put into place, and they wanted to give a safe harbor to businesses who restore FTEs after the CARES Act came into place and this loan program was put into place. The final step is to apply the 60% payroll rule. Again, the 60% rule specifies that of the amount of the loan that is forgiven, 60% of that amount has to be spent on payroll. No, in other words, no more than 40% of what is forgiven can be spent on non-payroll expenses. So the way to calculate this is to take the total amount of your payroll expenses and divide that by 0.6. So if your payroll expenses for the 24-week covered period equals $60,000, your loan forgiveness cannot exceed $100,000. Any more than $100,000 would mean that your non-payroll expenses represent more than 40% of total forgiveness. The Congress did come back in and make this change on June 5th. It applies to loans that were originated at any point during the life of the PPP program. So that means loans originated prior to June 5th, as well as loans originated after June 5th. The original rule specified 75%, but Congress felt that was too restrictive. They lowered it to 60% in hopes that this would be able to cover most businesses and to make sure that most of their payroll and eligible non-payroll expenses would be forgivable. At this point, after you've done all of these calculations, you need to determine the next step is to determine the amount that will be forgiven. And that amount is going to be the smallest of the following three things. It will either be your entire PPP loan amount, and this is the ideal situation because it means your whole loan is forgiven and you don't have to pay anything back. Or it could be the maximum amount of loan forgiveness. Again, that's your total payroll plus all of those eligible non-payroll expenses, such as mortgage interest, rent, and utilities, minus any reductions because of you reduced payroll by more than 25%, or you reduced your average FTE count. And third, the maximum loan forgiveness amount where the eligible payroll expenses equals or exceeds 60% of total forgiveness. In other words, the calculation you do for the 60% rule. Again, your loan forgiveness is going to equal the smallest amount of these three scenarios. So what happens to any amount that isn't forgiven? So under the changes made by Congress on June 5th, those amounts that are not forgiven convert to a loan with a 5-year term and a maximum 1% interest rate. The first payment is deferred for 6 months. There are no prepayment penalties or fees. So you can pay the loan off at any point in that 5-year term. This applies to all loans originated on or after June 5th. For loans originated before June 5th, the amounts that are not forgiven convert to a loan that with a 2-year term also with a maximum 1% interest rate, and the first payment is deferred for 6 months. The next step is to make sure that you have all of the supporting documents to back up the things that you put into your loan forgiveness application. The fortunate thing here is that the Department of Treasury, in the instructions for PPP forgiveness, the last 2 pages of the instructions spell out in quite a bit of detail all of the types of documents that they consider to be adequate to support the information you're putting in with respect to payroll, FTE count, and the eligible non-payroll expenses. So on payroll documents, you definitely want to make sure you have all of your bank account statements, any statements from third-party payroll services, any tax forms that overlap with your 24-week covered period, as well as payment receipts, canceled checks, and any kind of account statements documenting who you paid and how much you paid them. Likewise, you're going to want to make sure you have a similar documentation showing your FTE count for one of your 3 reference periods, as well as your FTE count during the 24-week covered period. And then with non-payroll expenses, you're going to want to have mortgage interest payment statements, amortization schedules, canceled checks. You're going to want to have rents. You're going to want to have your lease documents and canceled checks from your rent payments, and you're going to want to make sure you have all of your utility statements to again support what you're putting in there to document your non-payroll eligible expenses that you're asking forgiveness for. And again, if you look at the instructions to the PPP forgiveness application on the Department of Treasury's website, the last 2 pages of those instructions spell out in quite a bit of detail all of the types of documents that would be eligible to support these claims. As I said, the U.S. Chamber has developed a very straightforward guide that walks you through all of the steps that I just described in this presentation, because I recognize that this is a lot of information that it can be pretty confusing. In addition to that, the Department of Treasury's instructions can also be a bit confusing. So we have attempted to boil it down into a very straightforward guide to walk you through the basics of what you need to do to apply for PPP forgiveness. You can find that on our website at uschamber.com/PPP forgiveness. Additionally, we have a number of other guide documents that walk you through a number of the things small businesses should be taking into consideration as you reopen. But I think the most important thing for your purposes right now is that guide to PPP forgiveness. One of the things I want to just specify here too is that when this program was put into law, it was extremely vague, and that was done in order to give the Department of Treasury and the SBA as much flexibility as possible. And because of that, they have been making a number of changes as this program has progressed over the past 3 months. We have been keeping all of our documents updated to reflect all of the guidance that has come out. But as you apply for PPP forgiveness, one thing I want you to keep in mind is that you should not hesitate to reach out to your lender to ask questions about how they are going to treat your expenses when they determine forgiveness. It's up to the lender to determine, to make the ultimate determination on forgiveness. So if you have questions about whether a certain expense qualifies as an eligible non-payroll expense, for instance, talk to your lender about that. Don't just guess, don't just make assumptions. You're going to want to reach out to your lender to ask them how they will treat a particular expense with respect to forgiveness. Same thing goes for any kind of payroll expenses that may not be where you may have some questions. Again, you want to be in communication with your lender about how they are going to treat a lot of these expenses that may be unique to your business. So with that, I am happy to take any questions. I'm sure you have quite a few. So I hand it back over to Becca to help field all the questions.
Thank you. And Lorraine, I just put the wrong link for the website in the chat, so will you fix me?
Yes.
Okay, so we had a number of questions, and thank you. There's a lot of information here on this one. And Chris, I forgot to ask you before we started, is it okay for me to share this particular PowerPoint with our member participants?
Yes, absolutely.
Okay, great.
Yeah, and what the PowerPoint slides track our document, our guide document. So if you're going to use the slides, also download the document, because
It goes with it.
Our guide document will shed a little more light on some of the things that you probably have questions on than the PowerPoint slides.
Exactly. And we do have, we're linked on our coronavirus page at the Chamber to all of the resources at the U.S. Chamber, and they have a great staff, so they're keeping all the updates going, so you can get it that way too. We have a number of questions. One just coming in, can you please address independent contractors and 1099 income?
So for independent contractors or sole proprietors, payroll costs only include wages, commissions, income, or net earnings from self-employment or similar compensation. The non-payroll expenses, are going to be the same. It's going to be your mortgage interest, rent, and utility payments. We spell this out in our guide document. So I encourage you to download our guide document, because we do break out, we do have an explanation for businesses with employees as well as independent contractors and sole proprietors. One thing I do want to clarify though is if your business utilizes 1099s and independent contractors, you cannot use what you pay those individuals in your calculation for payroll expenses. And that is because independent contractors can obtain PPP loans on their own.
Okay, so this might be a twist. Is a consultant with a sole proprietor business in which the consultant is the only employee eligible for the PPP program?
So the consultant is eligible to obtain a PPP loan. They would fall under the independent contractor classification. They could obtain a PPP loan as an independent contractor and get loan forgiveness.
What about the 1099 income as a business owner? You know what, Harry, let's unmute Harry, or not Harry, I'm sorry, Ralph. Because Ralph, are you unmuted? Just to make sure I'm getting the right question asked from the chat here.
Hi, I have a hearing disability, so I'm having a little difficulty hearing you. So thank you very much for your patience. My question has to do with my owning a business in which all of my income is 1099 based. My funders, we provide funding for business loans when banks have to decline credit. And when we do our job, the lender pays us a fee for bringing them the business, and they 1099 us at the end of the year. So I'm trying to figure out how a person in my situation can calculate what percentage of my loan will be forgiven.
So I believe you are eligible for loan forgiveness. And I don't want to give you bad information on this. So I'm just going to encourage you to go to the bank where you got your PPP loan and talk to them about what types of payroll or what types of expenses you can submit to get loan forgiveness as a 1099.
Okay, thank you.
Thank you very much. Okay, let's go. Harry has a question here from Lloyd Enterprises. A construction company with loans for equipment. purchased over the last several years. Most of the loans do have some interest, but there are some that are at 0%. They're also hearing conflicting reports that the entire payment could be part of other expenses that are included in PPP forgiveness. And he's also heard that only the interest portion would be included. So he's looking for more guidance on that. And Harry, let's unmute you. So if I have mangled that question to Chris.
Nope, you had it right.
Oh, awesome.
So, if I'm understanding your question, it's that can expenses related to the loans you have on equipment be forgiven?
Correct.
Under the PPP, those expenses are not eligible for forgiveness. It's the loan application instructions are pretty specific. It's, again, interest on mortgages, rent obligations and lease payments, and utility payments. So loan payments on equipment are not going to fall into those categories.
Okay, that conflicts with the AGC and what they've put out at this point, just so you're aware of that.
I will take a look at that and flag that for our folks in DC, because I'm looking right now at the application instructions, and they're pretty clear in what eligible non-payroll costs are.
Okay, thanks.
Chris, if there's any change in that, will you send it along so I can make sure Harry and
Sure.
friends at Lloyd have it?
Sure.
Okay, are there any other questions that you might have?
So actually, going back to that, I'm looking. So I apologize. The print on the application instructions is pretty small. It does say payments of mortgage interest on any business mortgage obligation on real or personal property. So the personal property, it actually may qualify, now that I look at this more closely. I will check with our folks in DC to see what their understanding of interest on personal property means, but it could very well be that the interest payments on your equipment could qualify. But let me double check with our folks in DC and get back to Becca so she can follow up with you.
Okay, thank you.
Okay, I think I've got everything in the chat. Were there any others? Or anything anyone would like to add?
I have a question.
Lisa.
We bought a new company vehicle, paid cash for it. A week later, the business had to shut down. Are we able to use that towards our repayment?
Well, did you do it during the covered period, or did you?
I did it after February 15th.
Well, it's whenever if it happened during that covered period, so after you got the loan.
Okay. No, it happened before we got the loan, but after the COVID period.
So this is a good example of something you really should talk to the bank about when you're applying to see how they're going to treat that.
Okay.
It's one of those things that it could fall into that category of forgivable expense, but it may not.
Okay. Thank you.
Janine, did you have a question?
Yes, but it's a little off topic. I would wonder if the chamber would be willing to host a Zoom meeting on how to run Zoom meetings. I think that there would be an interest, and I'm sorry that's off topic, sir.
No, there's no such thing as off topic at the Chamber Network, but that is a really good idea, and we have some issues ourselves. So thank you for sharing that. We're going to follow up. As one of the things when we look, and let me just say it's not really off topic, because right now we're talking about finances and forgiving the loan so we can stay open for business. One of the other things we're working with our partners at SBDC and AWB and the U.S. Chamber is what that recovery looks like when we reopen, and digital platforms and using that kind of technology is part of the plan we're looking at as a country. So you'll hear more from us as we go forward in our next fiscal year on that. But thank you for sharing.
Yeah, I think it would be very valuable. Some of us are leaders in the community and need to be able to contact our create meetings with our group, our core group. But in other situations, we're also, we're students who participate in Zoom meetings or Skype or whatever. And it can be confusing. Yeah, I'll stop there. Trust me.
Well, thank you. And thank you, everyone, for your trust in me as you see me above Lorraine's name. So it's something that we can all do. We're not all as good as Bill Fuller on the backgrounds there. Okay, are there any other questions that we have for Chris? Because I know he's extremely busy and representing all the chambers here in the Pacific Northwest and carrying our concerns to DC. Anything else? Okay, I think our takeaway here, and we will get this PowerPoint to you, and remind that the PowerPoint does go with the guide, and we'll have that link included, that also it's really important, even with this information, that you go directly to your bank. We have included the bank directory. If you're looking for a bank, please consider our chamber network. Also, as a resource for our businesses, the SBDC at Highline College, I know, has been active in assisting a great number of businesses with that application process. So you can always reach out to them for that, but any kind of business resource help. And you'll, excuse me, see more in a partnership coming for that one too in the coming months. And Chris.
Becca, if I could just interject also, as you go through this process and encounter problems or confusion or difficulties, please relay those to Becca so she can relay them to me. Throughout this whole crisis, a lot of what I have been doing, what a lot of my colleagues across the country have been doing, is we've been talking to local chambers like Federal Way and getting feedback on how this program has been working. And that has done a lot to help guide and inform our advocacy in DC. And a lot of the changes that Congress made on June 5th, lowering the 75% rule to 60%, extending the covered period from 8 weeks to 24, extending the amount of time that businesses have to restore FTEs and payroll. A lot of those changes came directly from the feedback we were getting from our local chamber partners. And if we weren't hearing it from people like Becca, our folks in DC would not have been as informed, and we wouldn't have been able to get these changes done. We haven't been able to get all the changes done that we wanted, but the more we hear from you all and your partners at the Federal Way Chamber and AWB and the other local chambers that your businesses may be members of, the better we are at getting these things done in a Congress that frankly isn't really doing much right now. We've had a lot of success in getting changes made to this program, both with Congress and with the administrative agencies as they put out more guidance. So do not hesitate to relay concerns to Becca, because I am hearing what Becca tells me, and our folks in DC are getting an earful from myself and a lot of my colleagues across the country.
That is the nicest way someone has called me a squeaky wheel in a long time. So I want to thank you for that. And also one of the things we've been very active in too is C6s have not been included in any of this opportunity. And your Chamber of Commerce is a C6. So, by the bootstraps, we're all in this together, 6 feet apart. Okay, well, if there are no other questions, we're gonna call it, let everyone get to their day and make those business connections. But again, if something comes to your mind afterwards, just shoot me the email, and we do have that. There's one new message. We do have that network. Oh yeah, the photo. If you guys are in a position to have a photo there, if you would click it, because we're going to take a little snapshot so we can share with people and they can visually see how cool Mike Gintz looks in those gamer headphones.